We're joined now by Sean Callow. He's Westpac Banking Senior Currency Strategist. Thanks very much for being with us, Sean. So what do you think? Is this 10 trillion yen going to do anything?
Probably not. I think the market reaction pretty much sums it up. There's a lot of disappointment in the delivery of the Bank of Japan over what is really just a bit of tweaking. It's a little bit of extra liquidity, but really doesn't seem to be fitting the action of calling an unscheduled meeting, coming back from his trip to Wyoming early, and then just delivering what the market regards as really pretty disappointing. So we saw the yen strengthen in response, and there may well be more yen buying ahead.
But Sean, isn't the issue here that there isn't anything that they can do to control the yen?
Well, they didn't actually stress the yen in the statement, but of course that's the underlying message that they are concerned about when they talk about volatility in the markets. But really, what we do think that there are some options. Most obviously, they could take a page out of the Fed's book with very substantial scale quantitative easing, increasing their Rinban operations, which are pretty modest at the moment and haven't changed for a long time. They could have. We thought there was actually a pretty good chance they might have come out and announced substantial direct purchases of JGBs. So we think that would have been taken well by the markets.
Do you think we may get that down the road from the Bank of Japan? Is there any way that it can avoid that feat? I know it doesn't want to get involved in more bond purchases. It's made that pretty clear.
Yes, well, there's no doubt they are concerned about it. Clearly, if they've had this meeting today and come up with the decision that they have, then there's obviously a lot of dissent within the Bank of Japan about the notion of or resistance to the notion of further aggressive purchases of JGB. So I think it is an issue down the track, but given that they passed on the opportunity today, you'd have to say it isn't likely to come soon.
Is this because it's just too risky with Japan's huge public debt, 200% of GDP?
Well, I guess you could make the same argument for the Fed too. There'll certainly be people who say when you've got that sort of a deficit and you've got a huge stock of debt as well, then you really you shouldn't be monetizing that debt through direct purchases. And I think you can always make that argument. I think that is legitimate. But as we've seen from the price action in bonds over the past year or so, or particularly the past few months, there is a great deal of investor demand for the safety of government bonds outside of the really peripheral Europe and some of the emerging markets.
What is your outlook for the yen for the remainder of this year? JP Morgan predicts that it's going to strengthen to 79 versus the dollar.
We're not going quite that far. I think near term we're suggesting the low 80s, perhaps 82, 83, so not that far off where we have been. We have seen massive outflows from Japanese institutional investors to foreign bonds. It isn't having a great deal of impact at this point, but we suspect that would increase if we can at least see some improvement in US yields. So if we can see any sign of life in the US economy, maybe it's a few months down the track,
on the
but
US.
At least then you'd see the yields move. Yeah, a lot hinges on the US.
All right, Sean Callow, thank you very much for joining us.